Good morning and welcome to the Click & Go podcast for Friday the 12th of December. This week's been a poor week for markets, with the market down 5% off the early December highs. That's been triggered by some data from OPEC suggesting that oil demand is falling. The Chinese import data early in the week, which was poor, and the TLTRO uptake from the ECB, which came in below expectations. We'll explain all of those things in due course. The one bright spot was the US consumer, which we had some good retail sales. So the other key story was Greece, where we've got a snap election, which has got the market worrying about an anti-austerity government coming in. So you've seen an uptick in the Greek 10-year yield and sharp falls in that market. That hasn't infected the other peripheral states, with Italy and Spain remaining pretty firm, as you can see there. The other key market is Germany and Europe. And this week we saw inflation expectations hit zero. So the bond market is expecting no inflation coming out of Germany for the next 5 years. So we think all of these things put together, as well as the lack of appetite with the banks in Europe for taking on new credit, suggesting that QE is far more likely. Surprisingly, that hasn't stimulated any weakness in the euro, and actually that weakness, the euro has strengthened against the dollar this week. And I think that's because the market is now viewing the dollar as the growth currency of choice. So if you're looking to play growth, you're buying the dollar. That growth expectation fell this week because of Chinese import numbers. So they're a very key economy. They're importing 6.7% less in October year on year than last year. And we're also seeing less demand for oil. So OPEC are now saying that they're probably overproducing by about 1 million barrels going into 2015. So that all has people worrying about the demand situation in terms of growth. And as you can see here, the FTSE is extremely correlated to that Chinese import number. So it fell off back in February. We saw sort of pullback in the market, and you've seen similar sort of events subsequently, particularly in October. So the one key point, bright spot, is the US consumer, which remain resilient. And going into next week, where we've got Nike Q2s, we think it's worth just spending a little bit more time to tell you why we like that stock and why it's been very strong going into their results. So Nike is a growth company. They're targeting 10 billion incremental sales by 2017. That's top-line sales growth around 10%, like for likes. That sales split is between wholesale and direct-to-consumer. So what they've done extremely well is transition more sales straight to the consumer rather than going through retailers, so their margin goes up. Now 40% of sales are direct-to-consumer, and that goes through Nike stores and Nike.com. And as you can see, the growth rates in these two divisions are very high. So e-commerce was 250 million 4.5 years ago. It's now $1 billion business for Nike. So why do we like Nike? Well, we think the market for sports apparel is growing across gender and across cultures. We think Nike have been incredibly successful in customizing and personalizing their product to people to appeal to them, and they're very innovative. So their supply chain manufacturing methods are ahead of the pack and expanding their margins through that area as well. We think there's still a lot to go for in this stock. Outside of the US, Nike only have a 12% market share, so they can really expand that. So next week, as I say, we've got Nike on Thursday, but Monday we've got Carpetright, and we've got some house price data. Tuesday we've got Imagination Technology. I'll talk a little bit more about that. We've also got some inflation data and some confidence data coming out of Europe. Wednesday, Dixon Carphone, so we'll get more details about how that merger is going. We've got Bank of England minutes and an FOMC rate decision, which is obviously expected to stay unchanged. Nike, as I say, on Thursday with Accenture. And finally, Friday, we've got Carnival, so we'll get a sense of how the falling oil price is helping that business, with consumers having a little bit more money in their pockets. So back to Imagination Technology. They've had a rather painful repositioning over the last couple of years as they've expanded their product line away from just graphics to connectivity and CPUs, computer processors. the market at the moment is ignoring the Imagination Technologies guidance. So they want to see proof that what they're saying they think they can do will come to fruition. Just to give you an idea of what they think they can achieve, the three areas that they provide intellectual property into to sell to big semiconductor firms and technology companies are through graphics, where the market is growing at 20% per year, in computer processors, where it's growing at 15%, and connectivity, where it's also growing quite rapidly. Those markets around 3 billion units in graphics, 20 billion units, that's the big one in CPU, and 3 billion in connectivity. And Imagination feel that they can get between 40 and 60% in graphics. They can get around 25% of new design wins in CPUs, which we're going to talk about, and around 20 to 30% of the connectivity market, which is extremely important when you're looking at Internet of Things. So what is the implied earnings if they achieve this? So in 2019, courtesy of the house broker who've done the numbers, they're forecasting on these metrics that the revenue that they could achieve would be around 300 million of revenue and around 50p of earnings. Clearly, with the stock at around £2, if they ever achieve that with the 50% compound annual growth rate through to 2019-20, you see a very big move in the share price. So catalysts for this, well, the market's looking to see what new design wins they're going to get, and those generally come out of the big conferences and shows. We've got CES in Las Vegas in January the 6th to the 9th, so we'll be watching that one closely. And then we've got Mobile World Congress on March the 2nd to the 5th. So that's it from me. Have a good weekend. Thanks very much.